It should be a very good year for cryptocurrencies.
This is the Crypto EO. We're going to be forming an internal working group to make America the world capital in crypto under your leadership.
As I became a student of crypto, it was very clear to me that crypto is a currency of fear.
Trump wants to renegotiate trade terms with everybody.
If you're frightened of your debasement of your currency, or you're frightened of your economic or political stability of your country, you could have an internationally based instrument called Bitcoin that will overcome those fears.
Not only will this reduce the cost of virtually all goods and services, it'll make the United States a manufacturing superpower and the world capital of artificial intelligence and crypto.
Yes, I remain very bullish for this year on all risk assets.
Today, just days after his inauguration, we saw Trump sign an executive order for crypto that's projected to see cryptocurrency prices soar. Today, we hear the latest prediction from Real Vision CEO Raoul Pal on Bitcoin, crypto, and where the market is headed in the coming weeks. Bitcoin is one that is headed for an unprecedented price milestone, and Raoul foresees a financial tidal wave that will catapult cryptocurrency to new highs. With the keen eye of a seasoned investor, Pal casts a spotlight on Bitcoin and the expansive cryptocurrency market, recognizing its significance against a backdrop of economic uncertainty. Amid this fiscal tightrope walk, Powell discusses not only the economic indicators, but the absolutely parabolic surge in crypto prices we're about to see. Raoul Pal says the crypto world is on the brink of something massive, a seismic shift for Bitcoin and crypto in what he calls the banana zone. As the momentum is building and the institutions are quietly positioning themselves, Raoul says everything is about to change. He says the next phase of the crypto cycle is critical, and he's stacking big bets in his portfolio right now. With the next bull market, and with crypto and technology being the biggest investments this year, Raoul Pal says that he's remaining bullish on digital assets after significantly increasing his position size during the last bear market. The former Goldman Sachs executive gives a portfolio update on which crypto assets have the biggest upside in the coming months. With major pension funds and institutional investors on board for the coming cycle, Raoul Pal predicts that crypto is on track to be a $10 trillion digital asset class. Let's get right into the interview as he gives his latest Bitcoin prediction and where we're headed in the coming months. Drop your comments down below and subscribe if you enjoy the content we do here.
So Bitcoin is also driven by global liquidity, but it's also the adoption of this new technology, which puts it in this stupid exponential secular trend, but with volatility. The volatility, the big volatile drawdowns, are just driven by liquidity. So this year, we've already established is a liquidity positive year. In fact, a very big liquidity positive year because you need to roll all of this debt. So generally speaking, it should be a very good year for cryptocurrencies. Trump wants to renegotiate trade terms with everybody, whether it's Canada, whether it's China, whether it's Europe. And the best way to beat everybody into submission is a strong dollar. And so, because they all have dollar debts as well. So what he's going to do is use the strong dollar as the stick and then offer the carrot. And the carrot will be, we will lower the dollar if you agree tariffs or changes in the trade deficits. However, we're in this period where the Federal Reserve and the Treasury, and because of the dollar, have tightened liquidity over the last couple of months. It's forward-looking, so it's affecting cryptocurrencies right now. So they've been soggy for a while because liquidity was tightened a while ago. But again, our expectation is, it shouldn't last that long in price or time. And then we've got liquidity all the way through this cycle. Now, if we go back to 2021, the prior post-election cycle, the business cycle peaked really early in April 2021. Normally in these presidential election cycle years, the business cycle peaks towards the end of the year. So Bitcoin had a very complicated 2021, but what we're doing now looks very similar to the 2017 post-election for Trump. And what we saw then was ongoing injections of liquidity. We started the year with a sharp 30% correction or 25% correction, the sort of thing we're getting now. And then liquidity just came all year. So I think it's going to be a much stronger year than people expect. People have a lot of PTSD from 2021, where it peaked early, then collapsed, then went back up again, then collapsed. I think it's going to look more like we saw in 2013, 2017. So yes, I remain very bullish for this year on all risk assets.
So it's at 100,000. You see it pulling back 25% to 75, and then take off.
Probably
again
not even. I don't think it goes down 25% because there's ETFs and there's the market is more mature. So let's say it let's say 90,000. So it goes from 100 and where did it get to 110 down to 90,000. Okay, that seems about right. So not far from where we are now. And then it finishes the year in a worst case scenario. I think it's like 200, 250. In a base case scenario, it's kind of 350. And in a blow off top cycle like 2017, back end of the year, could go north of 500,000. It's difficult to know. So I always kind of give a probabilistic tree of, these are the kinds of zones. So my job as a macro investor and analyst is to look ahead in the future and try and figure out where the world is going. I have been using a framework since 2000 of debt, deflation, and demographics. And that framework has been in play ever since. It got me the right side of the financial crisis. It got me the right side of the European crisis. You kind of could see the world through that lens, and it worked very well. I missed the rise of technology earlier on. When I look forwards, the whole world that we understand it is driven by scarcity. And generally, as we've transitioned from manufacturing economies to service economies, scarcity of knowledge is the thing.
Raoul says it's the fastest pace of adoption of any investable asset in all of human history. By the end of 2025, there will be 1.1 billion active crypto wallets. The pace of growth is hard to comprehend, and it will be the fastest accumulation of wealth we have ever seen. This is the conclusion of a career's worth of research. And every single chart and piece of research leads to the same conclusion. Liquidity drives everything, and crypto will be the best performing asset of them all. Raoul has been stressing to investors for months that all the factors are beginning to align right now. We are heading into the banana zone, a period characterized by parabolic moves upwards in crypto prices. Don't forget, our partners at Jamie Tree Finance have launched a daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part, it's absolutely free, which will cover expert predictions, breakdowns of on-chain crypto data, and any breaking news that you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
Generally speaking, the economic cycle, and I'll use the ISM survey, Institute of Supply Managers survey from the US as the best guide, has been subdued. So even though we've had equity markets and stuff very strong, the economy's been subdued. So normally a growing economy, you should see the ISM above 50. GDP's actually been reasonably good, but there's something going on in the kind of manufacturing sector that is still sluggish. So the cycle has still been relatively slow, which has created this bifurcation of like tech stocks, which are not based on, debt dynamics or real world expenditures. It's a very separate kind of cash flow that they're earning. The traditional economy has been sluggish. Globally, Europe's slow. They haven't picked up yet either. The UK is a bit of a mess. Canada's slow. And then we go to China, and China's got a full-on debt deflation playing out. So bond yields are collapsing. They can't stimulate because their currency's too weak and they don't want to lose control of their currency. Everybody's desperate for the US to weaken the dollar because the dollar's way too strong for everybody. So the strong dollar usually slows the global cycle. Now Trump's coming in, the probability is he'll do the same as he did last time, which was the dollar's too strong, because the US needs to export goods. And a strong dollar means less exports, which means a larger trade deficit. So we're kind of a little bit in this no man's land where everything is slow. All the forward-looking indicators of the economy are suggesting, because the liquidity that went in and financial conditions over the last 6 months, they tend to be forward-leading, suggest that the economy should pick up significantly this year. Now, China's the one problem child. We have to, as I said, see the dollar weaken, but also the Chinese need room to stimulate. So then they can try and stimulate their economy. Now, the reason they're seeing this debt deflation is the same that we've all had similar issues, is too much debt, aging population, doesn't generate enough GDP growth to service the debts, and what you get is this big problem. And they've got it in the real estate sector, much like we all had back in 2008 and 2012 in Europe. They've got it in the banking system, much like everyone had in 2008 and 2012 in Europe. They've got the same set of problems because their demographics just are falling off a cliff. So that's a real problem. And what we need is the economy to grow. Now, Trump and his team know this. Scott Bessent is somebody I've known for a long time because he was an ex-hedge fund guy, and he's a friend of mine. I haven't spoken to him for a while, but he understands what needs to be done, and that's we need to get growth. So growth to me is, yes, you need to get interest rates lower. Yes, you need to get the dollar lower. Yes, you need to stimulate the US economy. You need to deregulate the economy. So all of those things on a forward basis suggest that the economy will be much stronger. Whether GDP changes much below, trend rate of GDP growth roughly is about 2% or just below it. We've been trending higher recently. Do we go much higher? Do we have a few periods of 3.5% growth? Maybe, probable. When you have a new administration, there's tax cuts, there's all of that stuff. You tend to do that, and Trump is very driven by the economy more than anything else. So I'm optimistic.
Pal's analysis brings attention to the liquidity cycle as a valuable indicator for understanding debasement, signifying a shift in the market's direction. He identifies a crucial turning point in June, where his weekly liquidity index hit its lowest mark. This prompted him to focus on purchasing Ethereum. Pal also acknowledges the divergence between liquidity and asset prices, emphasizing that during bull cycles driven by adoption and speculation, cryptocurrencies tend to outperform liquidity measures. Based on his findings, Raoul Pal strongly advocates for the strategic investment in cryptocurrencies, specifically highlighting Bitcoin and Ether as promising assets. He sees them as assets that surpass the performance of traditional financial institutions' balance sheets and provide a means of protection against currency debasement and the inherent flaws of the current financial system. What is your opinion on Raoul Pal's claim that investing in cryptocurrencies like Bitcoin and Ether serves as a smart hedge against currency debasement? Let us know in the comments below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.